Buckle up, everybody. We're diving headfirst into the wild world of crypto. It's January 24th, 2025, and you know what that means. Yeah, more twists and turns than your favorite roller coaster. But hey, that's why we're here, ready to unpack the day's top crypto stories. From Bitcoin to meme coins, even a surprise appearance from, well, you'll see.
Let's just say it's never a dull moment in this space. It's fascinating to see how market trends, regulations, even politics all weave together in the crypto world.
Okay, so first things first, let's get a sense of the overall market, the big picture today. Well, it's up, not by a ton, just over 1%. But hold on, get this. The total value is sitting at a mind-blowing $3.65 trillion. And trading volume, that's exploded, almost a 25% jump. Now, DeFi is definitely playing a part, but the real stars of the show, stablecoins. They're driving over 90% of that increased trading.
And that's huge. That surge in stablecoin trading volume is like a signal flare, you know? Could mean investors are getting ready to make some big moves. Think of it like this. They're moving their stablecoins, their safe haven, into position, ready to jump into riskier assets when the moment's right, like surfers waiting for the perfect wave.
So there's a lot of anticipation, a lot of energy building.
Got it.
Okay, let's zoom in on the heavy hitters now, Bitcoin and Ethereum. So Bitcoin, our old friend, had a pretty decent day, up almost 1%. But Ethereum's stealing the show, over a 4% jump today.
And it really makes you think about Vitalik Buterin's vision, you know, the whole scaling thing he keeps talking about. Layer 2 networks, faster transactions, cheaper fees, all that. This price jump, it could be a sign that investors are buying into that future, putting their money where their mouth is, so to speak.
Maybe they know something we don't, right? Makes you wonder. Okay, speaking of big gains, Lido DAO, that platform for staking Ethereum, well, it just went through the roof, over 15%. And here's the kicker. It's all happening while a record amount of Ethereum is actually being withdrawn from staking. What's going on there?
It's about who's jumping in. Institutional investors, they're starting to see the potential of staking, you know, earning those passive rewards, like a high-yield savings account, but for crypto. This could be a sign of things to come. Traditional finance is getting more and more comfortable with crypto.
Interesting. So it's not just the usual players anymore? Now, hold on. It's not all sunshine and rainbows in crypto land. Meme coins, those took a bit of a beating today. Yeah, that Trump coin, well, it plummeted almost 10%. Ouch. And there were even reports of a trader losing, get this, 90% of their $1 million investment in just 48 hours.
That's the thing about meme coins. They're all hype and speculation, and that's a recipe for wild swings. You got to be cautious out there.
Yeah, no kidding. And speaking of things that shake things up, former President Trump just dropped a bombshell. He signed an executive order.
A big one.
Banning central bank digital currencies, or CBDCs, and setting up a working group focused on, you guessed it, stablecoin regulations.
Whoa. This has the potential to change everything. It's pushing stablecoins front and center, could really accelerate their adoption, but it also raises some big questions about the U.S. government and digital currencies. What's their game plan here? Lots to unpack there.
Yeah, no doubt about it. All right, let's switch gears, head over to the regulatory world. The SEC just made a move. They revoked that accounting rule, SAB 121, the one that made financial institutions treat digital assets like liabilities. That one made them hesitant to get involved with crypto.
And what's interesting is the timing. Remember that news about Morgan Stanley? They're a huge player, and they're considering offering crypto services, even thinking about adding crypto trading to E-Trade. This SEC decision, it could be the push other big institutions need to finally jump into the game.
So one change could trigger a domino effect.
Interesting. Okay, got to talk about Ripple before we move on. They're proposing something pretty bold, this multi-asset reserve system. Imagine using a basket of assets, not just Bitcoin, to stabilize the global financial system. But it's stirring up some controversy, especially with the Bitcoin maximalists.
Right, it's a battle of ideas. Bitcoin maximalists believe Bitcoin should be the only reserve asset, a decentralized answer to fiat currencies. Ripple. They're arguing for diversification. They say a multi-asset system would be more resilient, better equipped for the ever-changing digital landscape.
Two very different visions for the future of finance. So what are the key takeaways here? What should we be watching for?
Well, on the one hand, a multi-asset reserve could help smooth out those wild price swings, make things more stable, could even improve how different cryptocurrencies interact. But on the other hand, the critics are worried. They say it goes against the whole idea of decentralization that Bitcoin represents. It's complicated, no easy answers here. Definitely something to keep an eye on. All right, got to touch on a couple of concerning things. First up, there's been a disturbing increase in crypto donations going to extremist groups, especially in Europe.
It's a stark reminder that crypto, with its anonymity and ease of transfer, can be used for bad things, not just good. It underscores the need for vigilance and maybe even tighter regulations.
Yeah, sobering thought. And then there's the FEMEX situation, that crypto exchange. Almost $29 million gone in suspicious outflows. They've had to halt withdrawals while they investigate. Security is paramount in this space.
Absolutely. Choose your exchanges carefully, folks. Look for strong security, transparency, a good track record. It's your money. Protect it.
Well said. It's amazing how much we've already covered, and it feels like we're just getting started.
Well, that's crypto for ya. Always something new popping up. Always another twist in the tail.
Speaking of twists, that FEMEX situation,
Yeah.
it really makes you think about security, you know? Not all platforms are created equal.
Oh, absolutely. It's like choosing a bank. Got to do your research, see who you can trust. In the crypto world, you're looking for those strong security protocols, a good track record, transparent operations, all that good stuff.
So it's not just about chasing the highest returns. You got to do your due diligence.
Exactly. And hopefully, as this industry grows, we'll see more robust regulations too. Rules of the road to help protect investors.
Regulation, yeah, that's always a hot topic.
Yeah.
But it's interesting to think how those regulations might impact innovation, too. Like, remember Vitalik Buterin's vision for scaling Ethereum, layer 2 solutions, blob scaling. What does that actually mean for everyday users?
Think about it this way. You're trying to send like a small amount of crypto to a friend, but the transaction fees are almost as much as what you're sending. That's a problem, right?
Totally.
Layer 2 solutions, they're designed to solve that. Imagine separate highways built on top of the main Ethereum network so transactions can happen faster, cheaper.
Okay.
And blob scaling, it's a bit more technical, but think of it like compressing a file on your computer. You're making the data more efficient so the network can handle more transactions.
So bottom line, it's all about making Ethereum faster, cheaper, easier to use.
Exactly. And that's crucial if Ethereum wants to become the foundation for a truly decentralized internet, which a lot of people think it can be.
Okay, that makes sense. Now let's shift gears. Morgan Stanley, one of the biggest financial institutions, they're exploring offering crypto services to their clients. That's a big deal, right?
Oh, huge. It's like if Morgan Stanley jumps in, it could have a ripple effect, pull in other big institutions too.
So it's going mainstream, not just for early adopters anymore.
Exactly. We could be heading toward a future where managing your crypto is just as normal as managing your bank account.
Wow. Now remember we talked about Trump's executive order, how it seems to favor stablecoins over CBDCs. What could that mean for the world of DeFi, decentralized finance?
That's a great question. Well, stablecoins are already a big part of DeFi, right? They're the stable medium of exchange for lending, borrowing, trading, all that. If stablecoins become like the dominant form of digital currency, which is what Trump's order seems to be pushing for, it could really turbocharge DeFi.
So we could see even more innovation in that space, new financial products, new services.
Absolutely, but it also raises questions about regulation and control, If stablecoins become so central to the financial system, how do we make sure they stay stable, transparent? Who's in charge? Lots to think about there.
Yeah, for sure. Brings us back to that Ripple proposal, too, the multi-asset reserve system. That one seems to be causing a lot of debate, especially amongst those Bitcoin maximalists.
It's a fundamental question, really. What role should cryptocurrencies play in the global financial system? Bitcoin maximalists, they believe Bitcoin should be the only reserve asset. The decentralized alternative to, traditional fiat currencies, they worry a multi-asset system dilutes that vision.
But Ripple, they're arguing for diversification. They say a basket of digital assets would be more stable, more resilient.
Exactly. Think of it like diversifying your investment portfolio. Don't put all your eggs in one basket.
Okay, I get that analogy. It sounds like there's no easy answer here.
That's the thing about crypto. It's constantly evolving, always something new to consider. It's what makes it so fascinating.
Speaking of fascinating, remember Lido DAO? That platform for staking Ethereum saw a huge price surge earlier, right? And it's all tied to the fact that a record amount of Ethereum is actually being withdrawn from staking. Seems counterintuitive.
It is, but it's actually a sign of confidence in Ethereum's future. Imagine this. You've got your money locked up in, a term deposit, but then you hear interest rates are about to skyrocket. You might want to withdraw your money early so you can reinvest it at that higher rate.
Makes sense.
It's the same idea here. Investors are withdrawing their staked Ethereum because they think its value is about to jump. They're trying to get ahead of the curve.
So they're betting on Ethereum, basically.
Exactly. And all that liquidity flooding back into the market, It could push Ethereum's price up even further. It's like a self-fulfilling prophecy.
Wow. It's amazing how everything's connected in the crypto world. One event can trigger a chain reaction.
That's the beauty of it. It's a complex system, always in motion.
This deep dive has been incredible. We've explored the excitement, the risks, the complexities, the potential of this crazy crypto world. And it feels like we're just scratching the surface.
We are. The most important thing is to stay curious, stay informed, keep exploring. Who knows what the future holds?
Well said. Thanks for joining us on this wild ride through the crypto roller coaster. Until next time, stay curious and keep on exploring.